This week in the parish of bourses and market structure, DB1's KOSPI copy, Hong Kong exchanges gears up for T+1, IBKR leaps and Schwab stars ahead of an impending MIAX IPO. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 305. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest's daily subscriber newsletter, the unique guide to the Bourse business sent daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, passing a first US crypto bill is a step forward, but for the most hubristic of markets, is genius not a moniker tempting fate? If you enjoyed this excerpt, you may be interested to know that you can read BitCarnage every day in Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, then you can find BitCarnage as a standalone on Substack. This week in exchanges, the London Stock Exchange Group is considering the launch of 24-hour trading. Why not spread London liquidity over a longer period? This clearly passes for management inspiration at the less productive side of Paternoster Square. Clearly nobody can compare listless LSEG with the motivated efficiency of customer-centric ICE on the opposite corner of the block. In this respect, Paternoster Square now amounts to a crossroads of capitalism. CME is also amongst them indeed also every European exchange. Absolutely everybody says, oh yes, we're all going for 24-hour trading at the moment. CME is a little different. Unlike lagging London, at least CME can lay claim to products that could trade 24 hours a day, but they're looking at 7 days a week. Does that really make sense when cash markets are closed? Not convinced the everyday thing is progress here. Singapore's central bank, they're going to place $1.1 billion with asset managers. That's 1.1 billion Sing dollars, I hasten to add, to boost the stock market, which must be heartening news for SGX. At the same time, there's a golden opportunity for European equities, says Bjorn Sibbern, former IPO-VID guest on 2 occasions and the boss of SIX Group. He's a man on a welcome mission, pro-market, pro-investment, and indeed building a fascinating series of markets across the UK with Aquis, Spain and BME. And the SIX exchange itself, he's now targeting 20% of European share trading across those platforms in the near future. Speaking of European trading platforms, Oliver Wyman have issued a report on behalf of FASI, the liquidity matrix, addressing fragmentation in European equity markets. The problem here remains that the Brussels blob respects the majority of banks, not the plurality of markets. Thus, systematic internalization is allowed to flourish in the best interests of broker-dealers, banks, et al., and against the best interests of a better market. FASI continues to plough the furrow in favour of markets, but unless that rumoured Damascene conversion away from dumb centralised socialist interventionism becomes a reality, Brussels is doomed to collapse. I sincerely hope la resistance to the prevailing technocratic orthodoxy of doom, which impoverishes Europeans, can prevail. The world desperately needs it. Optimism in Beijing Stock Exchange, the no longer a pet project, is the way that the headline describes it in the Financial Times. The tiny exchange there has become an IPO hub for SMEs. Also, within the Chinese hinterland, in the SAR of Hong Kong, the first batch of LME-licensed metals warehouses have started their operation, and Jane Street is back in India, allowing a resumption of trading after depositing $567 million. Over in results, it was a busy week for results in the parish as the results season got underway. All the details were in Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. After all, for the sake of this podcast, let's look at some edited highlights. Interactive brokers, stonking numbers. 3 months total net revenues plus 20%. 3 months net income plus 24%. 6 months net revenues plus 20%. 6 month net income plus 23%. Very good numbers all round, surpassing analyst consensus. And in fact then, actually surpassed by Schwab of all people. Finally, Chuck Brothers have reported numbers similar to, even surpassing IBKR, its broker's solid days in online markets, as Schwab also managed to get their integration risks over and therefore see profits growing. 3 month net revenues up 25%, net income up 60%. Quite stunning altogether. Back in Europe, the one good thing is the consistency of Euroclear's 7 tiers of Belgian middle management. It just never lets us down. It never impresses us either, that said. Thus, the Hindu rate of growth is now the EU rate of growth, where even the Manila Stock Exchange can grow 25% in 6 months. Euroclear ekes out a 2% incremental rise in profits over the first half of the year, barely keeping up with inflation. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, Patrick at derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or if you have time, a positive review will always be welcome, wherever you find this podcast. In new markets this week, Egypt's new commodity exchange will be overseen by the military-linked agency. What sort of a conflict of interest could we possibly have there? And in deals, well, the deal news was headlined by MIAX, Miami International Exchanges Group, filing for their long-awaited US IPO. Exciting news and entirely expected. Timing was the only question remaining. Where will MIAX value? $3 billion or more? Meanwhile, Euronext must improve their bid for HKEX. That's the word coming from Greece. Doubt this will surprise Euronext CEO Stefan Bujna, who's been merely seeking to achieve the deal at the right price, we expect. It's been a year, ladies and gentlemen, but don't forget you can still pack your copy. Get it downloaded now from Amazon. Capital Markets Revolution 25th Anniversary Edition, published by Exchange Invest, an ebook via Amazon Kindle at the ludicrously reasonable price of $9.99, a quarter of the price of the original shorter print book a quarter century ago. Meanwhile, we wrapped our IPO-VID season this week with a fabulous show. IPO-VID number 182 was Digitizing Carbon, with Steve Zwick making a return with some very, very interesting insights into the carbon markets. Our live stream will return in September. In the meanwhile, you can catch the back issues by searching IPO-VID on YouTube, LinkedIn and Facebook, amongst others. Lords of Finance is our book of the week, 1929, The Great Depression and the Bankers Who Broke the World, by Liaquat Ahmed, telling the story of 4 bankers who truly broke the world. The enigmatic Montague Norman of the Bank of England, Benjamin Strong of the New York Federal Reserve, the arrogant yet brilliant Hjalmar Schacht of the Reichsbank, and the xenophobic Émile Moreau of the Banque de France. A lively story well worth reading on the beach this summer, ladies and gentlemen. Product news: Eurex have expanded their global index derivative suite with first features on the MSCI Korea Index. That's 81 stocks compared to the KOSPI. Where did the KOSPI used to trade overnight? Oh yes, on Eurex, because they've now gone back to trading on KRX itself. So this marks an interesting move by Eurex, as it might seem like fair competition, but it always raises the question just how eager, spelled DESPERATE, DB1 are to gain business in their ETD arm. After all, they sold a tech system to Wiener Börse about a decade ago and then used the platform equivalent with Eurex to essentially defenestrate the Austrian options market straight to Frankfurt. Fortunately, the then Wiener Börse CEO has subsequently performed a good riddance repo when dismissed and has not been seen in the parish since. However, with these kinds of approaches from Eurex, one must wonder just who would trust DB1 Eurex in a partnership when, as KRX have done, they opt to go their separate way, and Eurex promptly lists a competing product. Technology news: Hong Kong exchanges have started a consultation on shortening the cash equity settlement cycle to T+1. And welcome to Bratislava Stock Exchange. They have become the 16th shareholder in EuroCTP, bidding for the European Union's consolidated tape project. And that means EuroCTP now covers exchanges in all 27 EU nations. Bit of a whoops nasty technical glitch jolted the Colombo bourse the other day. Sri Lanka's broker OMS fell over, not the matching engine per se, and Nasdaq Verifin have announced launch of their agentic AI workforce, delivering a step change in AML compliance efficiency. Career news this week: the PSE, that's the Philippine Stock Exchange of Stockholders, voted to re-elect the directors for 2025-2026, including Joseph T. Pardo and Raman Monson, re-elected as chairman and president and CEO, respectively, while Farhar Ansani has been appointed acting CFO of the Pakistan Stock Exchange. And here's a fun fact for you, ladies and gentlemen, post-trade on the remarkable Venice wedding of Jeff Bezos and Lauren Sanchez. For all the talk about a lavish affair, if you correlate Bezos' vast wealth with that of an American worker, the Amazon founder's $55 million nuptials are actually only equivalent to spend about $20 from his financial position when benchmarked against a US average salary of about $62,000 per annum. Yes, I too wonder how many weddings Americans could achieve if they only had to spend $20 a time, albeit I think the post-trade issue of divorces might raise the blended cost somewhat. And on that mysterious and magnificent note, thank you for listening to this EI Weekly Podcast 305. Join us daily via exchangeinvest.com, or if you're a new exchange you'd like to build, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets. This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.